If you haven't been keeping up with the latest presidential election drama, things are really starting to shake up. Former President Donald Trump just survived an attempted assassination in Pennsylvania, and current President Joe Biden has dropped out of the presidential election, and he now endorses Vice President Kamala Harris as the next Democratic presidential nominee. And if that's not enough, Donald Trump has also floated the idea of abolishing income taxes if elected president. Hey everyone, my name is Deandre Jones, and in this video, we're going to discuss what it means for the economy and your family if former President Donald Trump is elected again and abolishes income taxes. Former President Donald Trump's idea is to institute a policy that would eventually eliminate the federal income tax. I mean, I have to say, no more income tax does seem enticing. You get to keep 100% of what you make and no more complex tax filing. But let me give you the facts and then let you make that decision. For those that may not know what a tariff is, it's a tax that is levied on imported goods. For example, if the US places a tariff on cars that are imported from Japan, the importer now has to pay an additional 10% of that car's value as tax. Tariffs are generally used by the government to protect domestic companies by making imported goods more expensive, and this encourages consumers to buy domestically made products instead. It may surprise you that tariffs are nothing new to the US. It's estimated that sometime during the 19th century, tariffs provided as much as 95% of the income for the federal government. Before the adoption of the income tax in the early 1900s, where the US no longer needed to rely on tariffs. As stated in an article by Fordham Law School, today tariffs have become central to US trade policy in recent years. For example, President Trump has proposed a 25% tariff on cars from Europe, retracted a proposal to tax aluminum from Europe, proposed a 20% tariff on all goods from China, and imposed steel and aluminum tariffs on Mexico and Canada. These various actions and proposals have prompted other countries to consider, and some to even implement, retaliatory tariffs. So what's the impact if Donald Trump were to implement an all-tariff plan? If the US imposed higher tariffs on all imported goods, it would have both short-term and long-term effects. The first short-term effect is higher prices. Customers would be faced with the choice to either pay more for imported goods or switch to more expensive domestic products. Which leads me to the second short-term impact, increased cost. Whether you choose to buy imports or domestic goods, you'll end up paying more than you did before. And the long-term effect would be reduced imports. Over time, less foreign goods will be brought into the US because of higher prices. The basic law of supply and demand tells us that if prices rise, people will buy less, which is exactly the goal of tariffs. Reduce the number of imports, which means that with fewer imports available, prices would continue to rise due to limited supply. Another factor to consider, whether short-term or long-term, would be retaliation from other countries that could possibly create a trade war, which would be unbeneficial for everyone. Lastly, we need to cover what substituting income tax for tariffs would do for your pockets and taxes. Our current tax system is what you would call a progressive tax system. As your income goes up, you move into higher tax brackets, which means you pay a higher rate on the portion of your income that falls into those brackets. A lot of clients I speak with don't actually understand how their income is taxed based off the US tax bracket. Many people believe that their total income is taxed at the highest rate that their income falls in. But only the income within each bracket is taxed at its respective rate, not the entire income at the highest rate reached. For example, let's assume we have Dave and he has a taxable income of $120,000 in 2024. I want to remind you, these are marginal tax brackets, which means just because Dave is making $120,000 a year, it doesn't mean he is paying 24% in taxes. What it means is for the first $11,600 of Dave's income, he is paying 10% in taxes. For his income between $11,601 to $47,150, he's paying 12% in taxes. For his income between $47,151 to $100,525, he is paying 22% in taxes. Then for every dollar Dave earns between $100,526 to $120,000, he is going to be paying 24% of his money in taxes. So this is the top tax rate. And these are the marginal tax rates. So as you make more money, you pay more taxes on the money you earn, making Dave's total tax bill before credits and deductions $21,842.50. And this is what makes the system progressive. Now, an all-tariff plan would generally be considered a regressive tax system. Tariffs are applied as a percentage of the cost of imported goods, meaning that everyone pays the same rate regardless of their income level. This means that there will be a higher burden on lower income individuals. Middle and lower class people tend to spend more of their income on necessities and goods that may be subject to tariffs. For example, when tariffs raise the cost of essentials like groceries and clothing, a wealthier person who earns $200,000 a year can adjust spending without significant impact of their lifestyle, absorbing these increased costs relatively easy. On the other hand, a lower income individual making $50,000 a year will struggle as these price hikes eat into their limited budget, forcing them to cut back on discretionary spending and savings. So to recap, the key differences are that progressive taxes aim to redistribute wealth by taxing higher incomes at higher rates, promoting economic equality, while regressive taxes tend to place a higher burden on lower income individuals, as they pay a higher share of their income in taxes compared to wealthier individuals. Let me know your thoughts in the comments on which tax system you prefer. And if you need help with your tax situation, visit our website in the description below so that we can all get closer to tax-free wealth and financial freedom. And don't forget to like and subscribe if you enjoyed this video, and I'll see you in the next one.